All right, so just on the cover page here is a lot of information about me. We're gonna have to move pretty quickly through today's session. Usually I like to run a session where I invite questions throughout, but we've got limited time, so I'm gonna race through the slides and hopefully we'll have some time at the end to circle back and for questions. But also there's a lot more material on these slides than I'm gonna be able to talk about today. I've got some bonus slides at the end on wholesale CBDC because I'm gonna talk almost exclusively about retail CBDC. And so I'm hoping that this will be made available. These slides will be made available to everybody. If not, I'm easy to find. I go under the name Kiffmeister, kiffmeister.com, kiffmeister@gmail.com, and Twitter, I'm at Kiffmeister, so I'm really easy to find. Just along the left side there, there's a couple of, well, 3 of the recent IMF papers that I've been involved in the CBDC space. And so you're all welcome to visit the IMF website and search Kiff and you'll find me there. So I'm still very much, even though I retired from the IMF 2021, I'm still quite actively involved in different projects with the folks there. And so in terms of growth, I mean, CBDC, retail CBDC in particular, is definitely a very big growth industry. When I started sort of engaging in CBDC work around 2015, there were just a handful of central banks that were looking at retail CBDC. Now we count to about 100 or so, probably more, because the way I track CBDCs based on publicly available information. A lot of central banks are kind of shy. They don't want to talk too openly about their CBDC efforts. In some cases, because they're as we'll see later, CBDCs are very specifically defined, and many people jump to the conclusion that CBDC is a form of cryptocurrency, and they don't want their citizens getting excited about, oh my God, my central bank is going to be issuing a Bitcoin or something like that. So they want to keep a low profile. So this is basically only publicly available. I suspect the numbers more than probably 20 or 30, 40 more banks are looking at CBDC. I think it's like one of those things that's kind of mandatory. I think that any central bank worth its salt is looking at better ways of making money. And so they're looking at CBDC quite seriously. So first of all, when I started my CBDC journey, I would define CBDC as a digital form of central bank cash. And you might still define it that way, but really it's more like a digital, it's more like the digital currencies that we have all around us and have had for a long time. The examples are here, M-Pesa in Kenya, and then we got WeChat Pay and Alipay in China, and in the US you'd have things like Venmo and PayPal and even arguably commercial bank money. That's all digital too. We do all our transactions in digital currency. So I've kind of switched my definition to be, in very broad terms, it's central bank. It's a central bank issued e-money essentially, and this is the table that if you've been following my blogs and papers and so on, this table's been around for a long time. It's been through a lot of evolution. I keep changing it all the time, but one thing that stays kind of constant is that gray zone there, which is the definition of a retail CBDC. So first of all, the key thing is central bank issued. That's what differentiates it from other types of e-money. And so sometimes people pitch me, my central bank is considering, or my country's government is considering issuing digital currency. My first question, if it's going to be a CBDC, is the central bank issuing it? In some cases, it's governments, ministries of finance that are doing the issuance. That's not a central bank digital currency. So it's going to be backed and issued by the central bank. And then also it's got to reference the jurisdiction's unit of account, which differentiates it from, say, in the case of, say, El Salvador, they've made Bitcoin legal currency. Well, that's not a central bank digital currency on so many counts, but right at the start, it's not based on the jurisdiction's unit of account, which is their home currency. But I've got a few examples I'm going to pitch at you in a minute that leads people like the CBDC nerds like me and Atakan, we discuss all the time in the context of the CBDCtracker.org, which is the best place you can go to find out who's doing what in CBDC land. But we have all kinds of interesting discussions about, is this a CBDC or is it not? And one of the discussion points is around unit of account. So, for instance, if the Fed started issuing a digital currency denominated in the euro, for instance, that would not be a central bank digital currency by this definition. It might be a central bank issued stablecoin, maybe, but not a CBDC. So that's the core of it. And I'm not going to delve into all the other definitions, but you can see that all the other ones except for cash don't tick all those boxes. And of course, cash is not digital, so it fails on the D part of CBDC. Another thing I highlight here is that you'll see some people define CBDC as the central bank form of cryptocurrency, essentially, and it runs on distributed ledger technology. But that's not necessarily true. And later I have a slide that shows you that some of the central banks have issued or tested CBDC live. Some of them are DLT, some of them are not. It's not necessarily so. Just as an aside, wholesale CBDC is a bit different. When you talk about wholesale CBDC, we're talking about the DLT-based one, because in fact, wholesale CBDC is nothing new. Every RTGS system is a wholesale CBDC already. So when we talk about novel wholesale CBDC, we're talking about DLT only. And there's also the IMF has pitched this idea of synthetic CBDC, which is essentially a stablecoin. I got it in the second column from the right there. It's basically a stablecoin issued by a private company that's backed by deposits in the central bank. None of arguably WeChat Pay and Alipay are synthetic CBDC because they're obliged to keep their reserve assets at the People's Bank of China. So arguably that is a synthetic CBDC, but the whole term of synthetic CBDC has become kind of a forbidden word now. The BIS has trashed it completely. And CBDC is a CBDC, period. So let's drop this synthetic idea. So we're going to drop it today too. And this is where we get in some of the blurred zones of the CBDC. So the Republic of Palau, it's a Pacific island, has partnered with Ripple to develop a US dollar-backed digital currency based on the XRP ledger platform. But they don't have a central bank, so it can't be a CBDC. So I've floated the idea of calling it GovCoin. We'll see if that sticks out there. And then and also Ripple's working with Montenegro, and they're in that case, the question comes up. They use the euro. That's their unit of account, so it ticks that box. And so in my mind, even though it's going to look like a stable coin, a central bank issued stable coin, it does tick all the boxes for me on a central bank digital currency. It's issued by a central bank, backed by a central bank. It's also based on the country's unit of account. So that to me makes that clearly a CBDC. Now, this is the one that we're still having lots of discussions about. Atakan and I are based right now undergoing some discussions as to whether the Zimbabwe gold ZIG digital currency is a CBDC. It's backed and pegged to and redeemable into physical gold. It's issued by the Zimbabwe Central Bank. I believe that the government of Zimbabwe has made the ZIG a legal tender. The intent is that this ZIG will be used by citizens of Zimbabwe to buy coffees and groceries and so on. And so to me, even though it may not actually become a unit of account, and that's an arguable definition anyways, but let's say no one actually uses it. The government and the central bank obviously aspire for it to be a unit of account. So, maybe it ticks that box, maybe not. If you're not a believer in it, you'll say, no, that's really just some kind of tokenized gold token and leave it at that, sort of a stable coin of some sort. But I call it a CBDC because to me, the aspirational aspects of being unit of account ticks that box for me. And right now, I don't think it shows up on cbdctracker.org that way. So again, the nerds among us have lots of great discussions around such topics. Another controversial one is that we've got a number of these central bank operated retail payment platforms. In Brazil, you've got the Pix instant payment platform run by the central bank. It's based on a traditional centralized ledger. And funny enough, no one calls that a CBDC. Now, the National Bank of Cambodia's got this platform called Bakong, which is essentially the same thing as Pix, from what I know. I mean, sometimes the information you get on these platforms is a bit sketchy, but to me, it looks very similar to PIX. It's a payment system that's run by the central bank, but it's really just a payment system that links together banks. So it's interbank payment system. But the vendor, Mitsu, pounds the table and says this is a CBDC. And I think they're saying that because it's based on DLT, and that's their personal definition of what a CBDC is. I have not seen the evidence from the Central Bank of Cambodia that is in any way a CBDC, because it's still commercial bank money. It's just being exchanged on a central bank run platform. And the problem I have with that is, if you want to really know whether something's a CBDC, you would normally go to the bank's financial statements. So Bahamas, for instance, has launched the sand dollar. Well, it's easy for me to check that out because I can go to their financial statements, and right below cash in circulation, there's a line that says sand dollars. And for some reason, I don't know, it's just I don't know where to look. I cannot find the financial statements of the Central Bank of Cambodia. And of course, it's not in my language, but I mean, I'm pretty good at identifying what a financial statement looks like with columns and so on. And I've gone through their website and have not found that anywhere. So I can't prove or disprove that, but it certainly doesn't look like a CBDC to me. So again, these are the CBDC nerd discussions that we have. I don't call the Congo CBDC. World Economic Forum calls it I think they call it a quasi or pseudo CBDC. And I think that's kind of where the ball got rolling in the wrong direction, but not a CBDC. Okay, so who's doing what? This is a map from the cbdctracker.org, and it shows you the status of retail CBDC around the world. And then you can see it's got some color coding there. So you've got the blue ones, which you can hardly see them in there, but those are the ones that have been launched. And there's, I think, 4 of them. And then you've got pilots, which are the brown ones. And difference between actually in the launch and a pilot is the pilot's usually it looks like a launch, but it's on either a limited time basis or limited scope basis. So in the case of Uruguay, they did a 6-month pilot, and at the end of it, everyone had to redeem their CBDC, and they closed down the project for evaluation. And China's running one where they run different types of configurations in different places, kicking the tires on different types of CBDCs, different use cases. And then you got proof of concept. And this is where things get fuzzy, because you'll often get a central bank, announce with great fanfare that we're doing piloting now. Now, proof of concept, difference in a proof of concept and the pilot is the proof of concept is more like a lab experiment. And one extreme is simply just the central bank testing out different technology platforms. Sometimes, though, it's where they actually do what looks like a pilot, but it's often with their own staff. For instance, in the case of Ukraine, I think they called it a pilot, but it was actually run with the employees of the central bank, and I think they were able to use it in the cafeteria and a couple of select vendors outside the central bank. But that to me is a proof of concept because it's done in a very, very safe way. You're not exposing the central bank to the general public and the potential for embarrassing glitches and that sort of thing. And then you've got a lot of central banks that are in the research phase, and there's some blurry lines for me between research and proof of concept, because I would bet that a lot of the countries that are doing research are also testing out different platforms. They've engaged with one of the vendors like a Ripple or a GND, for instance, and they've tested out the technology, inside the central bank amongst the IT people. So there's probably a blurred line between research and proof of concept. For me, there's a very bright line between pilot and proof of concept. And so, like Turkey, for instance, just released a white paper on their progress on CBDC, and they were talking throughout the thing. They were talking about pilot, and yet they never said anywhere what that pilot included, like what was the nature of the pilot, who was being invited to partake in that pilot. So for me, that would remain a proof of concept until I get some kind of proof. And we've got various detectives out there, forensic detectives, looking for any evidence of what this pilot is all about. And I think we have a session in this room later today and maybe this is our chance to find out where we're going to bucket Turkey. And just so it's really clear, so these are the countries that have fully launched retail CBDCs in Nigeria, and there you've got to really squint to see it. And there's some Caribbean islands in there that have fully launched. And this is, and then you get into an interesting counting convention here, because the CBDC tracker.org kind of competes in the CBDC tracking space with the Atlantic Council, and they count 130 central banks who are researching CBDC, retail CBDC. We count 100. And the reason is that the main reason is the Atlantic Council counts by country, and we count by the jurisdiction, the central bank in that jurisdiction that can issue CBDC. So in the Eurozone, for instance, Banque de France cannot issue a CBDC, specifically a retail CBDC. Only the ECB can. The Atlantic Council counts every central bank in the Eurozone that's involved in the experiments, because the Banque de France is definitely involved in some of the experiments supporting the work of the ECB, but ultimately the ECB is the only central bank in the Eurozone that can issue central bank digital currency. So when the Atlantic Council accounts launches, there's one of those little dots is the Eastern Caribbean Central Bank, which plays the same role as the ECB in its currency zone in the Eastern Caribbean currency union. There's nine countries in that union. So I count one, Atlantic Council counts 9. So when you see these big differences between our tracker and theirs, most of it's really just this. We've decided to count central banks in different ways. And we've got 2 that have canceled. We've got Ecuador. They had the Dinero Electronico, and that was active between 2014 and 18. And then, and this is to me my proof that a CBDC doesn't have to be based on DLT, because this is Finland, and they had the Avant system, and it started in 92 and then ran for 13 years, and then they shut it down. And of course, 1992, Satoshi hadn't written his white paper at that point, so there was no DLT. So that's, to me, kind of shows that you don't have to be DLT to be a CBDC. We'll talk a bit later about the whys. People often ask, like, why did they cancel, and why did some central banks shut down their retail CBDC work? But we'll get to that a little later. And this is my personal tabulation. It's really hard to see. When I started tracking back in 2015 or so, this same table had maybe that handful of central banks. Now it's got the 100 or more central banks. And if you go to my web page, the links below, you can click on any of those links, and it'll take you to the kind of smoking gun evidence of that particular central bank's research work, and it buckets it the same way I mentioned before, by launch, pilots, and proof of concepts, and so on. And I've got this other advanced versus not so advanced research and development. Maybe I might eliminate that some point of this. It's kind of a judgment call. Who knows how advanced any of these central banks in that big cluster there are advanced. But I do suspect that in those 5 central banks that are in the advanced phase, those are probably doing proof of concepts. I can't prove it, but they probably are. And I shouldn't say I can't prove it. I sometimes have private information that I don't, if it's given to me privately, I'm not going to share it. So if some central bank told me, hey, we're actually doing proof of concept work, but we just telling you about this, I will not use it here. So I think I've covered all the different factoids that drop out of this. But like I say, you can follow, if you go to that link at the bottom, it's always got the most recent version of this table. And then in terms of why are central banks looking at CBDC? So I've broken some of them down into the ones that are relevant for advanced economies, and then others for emerging market countries. I know here we are at the DEA, and it's we're focused on advanced economies, but a lot of my personal work that I still do with the IMF and so on is it's actually most of it's with the emerging market and developing economies. And so in terms of advanced economies, a common theme would be is I say ensuring access to universal low-cost digital payments in the face of declining cash usage. And that's be like Sweden. Sweden would be like the poster child for that particular case, where like 80 or 90% of all payments are being done in not in central bank money, but a private payment platform. Almost nobody's using cash, nobody's accepting cash. And so that kind of it can undermine the central bank's ability to conduct monetary policy, for instance. And there's other reasons why they may want to reduce monopoly effects in the money system. So that's a very, very common one. And then when you're talking to the EMDE countries, they always talk about they're using it as a way to improve financial inclusion and financial digitalization. Many of them are focused on reducing the cost of managing physical cash. And I think there's economies of scale in producing high quality physical money. And so for small central banks, that can be an awfully expensive operation. And then risks, I've heard that in both Brazil and also the Eastern Caribbean, there's that theft risk. And in case of the Eastern Caribbean, it's literally Pirates of the Caribbean. There is a risk for cash for them because they transport the cash between islands using boats. So they would like to eliminate cash altogether, although you'll never hear a central bank say, we're going to stop producing physical cash, because that would probably cause riots in the street. I think everyone wants to know, no matter how little cash they use, they want to know that there's a backstop. And in a way, it's the ultimate backstop. If power goes out or connectivity goes down, your digital currency may not be of much use unless you have an offline version of it. And so physical cash is always your best backup. And the other one is as the use of central bank money goes down, the income that central banks earn from those bills they issue and some banknotes is they call seniors revenue. It's kind of a free lunch for the central bank. So many of them want to get their claw back their seniors revenue. Others aspire that it's going to reduce the currency substitution. If you create a digital version of your central bank money, everyone's going to want to use that instead of whatever else they might be using, whether it be dollars or euro or Bitcoin or whatever. I'm a bit skeptical about that. Just changing the form from physical to digital. Usually, when people are using some other currency, there's other more fundamental reasons that the digital currency won't improve. And then some just hope to, for instance, leapfrog in terms of the efficiency of and safety and resiliency of their payment systems, because especially in EMD countries, they might be running systems that are very antiquated and maybe very inefficient. So they're thinking, instead of just doing the same old, we're going to replace it with a whole new system, possibly based on DLT technology. Others are hoping that they can improve monetary policy effectiveness, and one of the ones that was floated for a while was the idea of a CBDC that pays interest and would pay negative interest when you're in the negative interest zone, which we were not that long ago. And so that would be the catch with that is if you're going to use the central bank digital currency with a negative interest rate to be able to strengthen the negative interest rate effect, you've got to somehow eliminate or make the use of cash really hard or expensive. And so to me, I think that's kind of a non-starter in terms of motivation. Some are hoping to fight tax evasion and illicit use of money. That runs us into some interesting privacy-related questions that we may have time to discuss later. So it's one of those things that sounds like a great idea in theory, but will people want to use a form of currency that has that degree of surveillance built into it? Others aspire to use CBDC as a way of distributing government payments directly to citizens. That idea popped up during the pandemic when the US government, for instance, was considering actually launching an emergency CBDC in order to distribute stimulus payments to citizens. So, because many didn't have bank accounts, so when they wanted to send stimulus payments out, and the question was, how do you do that when we don't have a bank account to send it into? And so you send it by the good old snail mail, and that's just not very efficient. And then cross-border payments is another aspirational aspect of retail CBDC. I put in blue because I think it's a really aspirational thing. The idea of building out a retail CBDC that's going to be interoperable with other countries' CBDCs is a bigger topic, more complex than what you want to tackle, I think, with the retail CBDC. The wholesale CBDC arena is where that's being explored, and I think that's where you want to start before going to retail cross-border payment CBDC. But that's me, and some central banks I mean, I think Nigeria will say that they have a sort of a cross-border aspect of their CBDC, but it doesn't. I don't think anyone's using it, and I don't think it's really truly the case where a Nigerian citizen can send an e-naira, as they call their CBDC, directly to someone in some other country where they can, transform it into their country's CBDC. Maybe when you've got a more vibrant ecosystem of CBDCs, that will be possible, but we're not there yet. And in terms of common themes, first of all, none of the central banks run their digital payment platforms by themselves. That's not a thing that CBDCs or central banks are good at. They don't have bricks and mortar and so on. So they basically partner with private sector to run the CBDC platforms. Transaction fees and remuneration. None of the ones launched so far have transaction fees or pay interest. And I don't think anyone's really seriously thinking about that right now. I think maybe the ECB may be contemplating remuneration in order to mitigate the risk that you compete too effectively with the commercial banking system and suck deposits out of the banks and the CBDC. To mitigate that, what we call disintermediation and run risk, limits are being applied on how much you can hold of CBDC, and then to conform to the illicit finance FATF standards. Most are based on, and they have tiered limits. Not only there's one hard limit, there's different levels of limit based on the amount of KYC information is taken from citizens. And then there's the dimension of privacy and anonymity, and that's kind of wrapped up in the discussion you're having about how to conform to the FATF standards. And there's a lot of discussion around privacy and CBDC, and we'll be hearing more about that in the digital euro discussions. And technology platforms, a big decision, could be centralized or DLT, and whether to offer offline access, which is a rather controversial topic because controlling for double spending risk in an offline system can be challenging. And this is just a quick list of the projects that have launched or been piloted. And you can see in the rightmost column, there's your evidence that some are DLT, some are not. And then again, I'm not too sure how the GMT platform works, but I suspect that's a centralized platform too. Like I say, these slides, you can get them one way or the other from me if you want to dive into them. And these are just the details of how these different limits and so on have been affected in different pilots and launches. I don't want to spend time because I'm running out of time. And then also there's different sort of there's different ways of controlling for that privacy versus AML compliance out there, other than the very crude limits and so on. And I've got links to some of the different possibilities that are being explored out there. And then we get to programmability, and it's wrapped up in the whole privacy discussion.
My street corner in London, and that yellow sign is up there being waved around.
That's right. Yeah, I think I've seen. Well, CBDC itself is being touted as being the most extreme threat to liberty, and like I was at an announcement by Tom Emmer, who's sponsoring a bill in the U.S., and he virtually wrapped himself in the American flag and said, it's un-American, and we're not going to have a CBDC. But you talk about programmability, and then we've got that headline from the IMF. Our deputy managing director at the time talking about how wonderful programmable CBDC can be because you can control how people spend money and so on, and that's wonderful stuff. I mean, that's like poking a bear with a stick, That was the most tone-deaf thing I've ever heard anybody say. But the programmability, and you've seen that the ECB, for instance, said the digital euro will not be programmable, but we can get into more nuanced discussions where you talk about programmable money versus programmable payments. And if you're running one of these intermediated CBDC systems where you're delegating the hard work to the banks and so on, you could imagine a CBDC that's not programmable as it comes out of the central bank, but the payment service providers, banks, and so on can implement it with citizens' approval and so on. It wouldn't be baked in. And then just a final thought, I call the kind of CBDCs we're mostly talking about today what we call Death Star CBDCs, and they're big, they're mega big, and they want to be the kind of currency that everybody uses every day. And what I didn't say in those tabulations is that all those launches and pilots have led to pretty flat demand, pretty much very, very overwhelming, and the central banks are tearing their hair out. How do we make these things work? I think some of the problems we have there are that in some cases, the central bank just rushes these things out the door without really proper preparation and so on. And there's an IMF model called the 5P model that has a very staged approach. And so some of them skip too quickly from that. The other is that what I call the knife edge between being too attractive and not too attractive. Because if you're too attractive, you're going to disintermediate banks. So some of the central banks have told me we're so frustrated that we want to design a kick-ass CBDC, but if we do that, we're gonna disintermediate. So what are we gonna do? So they're kind of like deer frozen in the headlights. So an alternative is what we're seeing around the world. It's called the test and deploy model. It's basically very targeted, limited use case CBDCs that are really laser focused on meeting specific demands of users. And we're going to hear in this room from the Central Bank of Hungary talking about their platform, which is not a mega Death Star CBDC, but it's actually being used by people. It's a successful pilot. And then Australia, Kazakhstan, and HQ are all exploring these special targeted use cases, which I think is a good way to go. I mean, start there, and then you test it out. Yeah.
Sorry, but
Yeah, I'm going to wrap up right there. So there's the contact information you want to hear more, and there's the slides that follow this on wholesale CBDC.
Thank you.